You have to share the screen. Yes.
The same chart when not when sunshine was
Oh,
around here and now this one.
you see, if you had been selling, you would have lost. If you had been a seller at that time, you would have lost.
Yeah,
Why?
no, but I'm trying to talk about the take profit. So once you see another sunshine and the opposite direction.
If you were buying,
Yeah, I'm well.
you should take out, yes. Because you can't catch all this. That's one. Although the second thing is you want price to get to a Fibonacci level, like this Fibonacci pivot. So if you hold the trade believing the trend is strong, it will keep going up. Sometimes you take small of the profit you already have. Other times you just break even. Break even is you now move your stop loss to where your entry is, so that if the trade goes against you, you take no losses, but you don't make money either way. But one of the most effective way to ensure you are safe is you've been buying from here. Just take your money when the sunshine appears, because it could start to turn. Other times it could move up. Other times it could turn. Like now, I think it's resting on the level.
Yeah, I'll be okay. Like now, when it was there, at least I entered, it showed, and then went to the show another thing. What's it?
Now, the only thing you should be interested in is buying. Why? This is your entry rule. Let's go to the 15 minutes time frame. This is, oh, okay, this is supposed to be 15 minutes. The 15 minutes, where are your moving averages? This is how you enter your trade. Where are your moving averages? That's what you want to pay attention to. When they are in between price, it's a range. And in ranging market, you will now go to the 1 minute to know where that one is. Because in ranging markets, you can catch up, catch down, catch up, catch down. But in trending markets, you're only catching one direction. Range, you can buy, sell, you can sell inside this range, buy here, sell here. But you tell the markets in a range when the moving averages are in between price. Now let's assume from what I'm saying here, I'm more interested in buying. Why? Because price is above. The moving average looks like they have not curved yet, but it looks like, preferably you want them to curve. It looks like they are spread apart. So when that happens very well, and I'm seeing it very well, I will go to the 1 minute time frame. And what does it say on the 1 minute? I'll change it. I know. On the 1 minute. Now on the 1 minute time frame, price just crossed the 4,000, which means it's an uptrend. So price crossed the 4,000. On the 15 minutes, I've been thinking of buying. What's the next step? We go to our where is the slide now? Where did CJ keep the slide now? Sorry, I'm looking for the. He has closed it, I think. I wanted to show you the slide. So you see our entry. CJ has closed it again. Okay. So it's you see, I'm a nice city student. How very nice. A nice city student. Yeah, just you know, the nice city student, the very good friends. Oh no. Nice action, nice action. How about? I'll show you that. I think now, remember to apologize first. Okay, should I start? So as I was saying, we now move to the second. Do you want to do that? Just step outside. So the entry says, this says we tell the trend, and now on our chart, assuming the 15 minutes, because I really want us to place a trade. So you see what I'm saying. Assuming the 15 minutes was really, really aligned, like here now we see it sloping up. We see price away from it, but they are not really spread apart. But let's assume, okay, price moves higher and they are spread apart. You are interested in buying. We drop to the 1 minute time frame, which is the second tap here. Price just crossed the 4,000. That means we are interested in buying. Now, the next thing we want to see, according to the checklist, the next thing we want to see according to the checklist is what? We want to see sunshine appear below. That's the first one. And then, okay. Sorry. Okay, for our online community and to everyone, we're sorry there was a technical glitch, an error, but now it's been fixed, and I'll quickly, less than 10 minutes, 10 to 15 minutes, go through the entry rules and techniques so that we understand, and possibly, if a setup lines up for us, we place a trade with the setup so you see it. So like I was saying before, the first rule is simple. The trend. You do not want to be against the trend. So how to tell the trend? 15 minutes. The moving averages are sloping downwards and they are spread apart with price below the 50 below the 100 below the 200 on the 15 minutes time frame. Now, on the 1 minute time frame, you now want to see price below the 4,000 moving average. Then what will now inspire your buy? Okay, I'm with the trend. Price is below the 4,000 on the 1 minute, price is below all the moving averages on the 15 minutes, and they are spread apart and sloping downwards. I will go to the 1 minute time frame now, and I want to see sunshine appear above price, not below. I ignore the ones below because it's against the trend. I want to be trading with the trend. Sunshine appear above price. Then I wait for price to what? To cross the 100 moving average and sloping downwards. Then let me show you what that looks like. Here, for example, look at this. Price crossed below. Then I wait for the price to cross below the 100. The 100 is the black moving average. The 100 is the black moving average. I wait for, let me show you in the chart also. We'll find it in the chart. I want to find the sell setting. Now look at this, beautiful. Let's assume we were here. So this sunshine appeared here. Can we all see it? This sunshine appeared here. Now I want price to cross below. So look at exactly here. Price crossed below the black moving average. On the 1 minute time frame, price crossed below it. Sunshine appears here. Price, I don't just jump in. That's why this trade here would have been a losing trade for whoever jumped in. This is the 100 moving average. Sunshine appeared here. Did it cross below the 100? No. That's what I'm trying to tell you. There are ingredients. If you jump in, you get stopped out. Sunshine appeared here. Sunshine moved here. Sunshine moved here. Sunshine is here. But do I sell? No. We'll go back to the checklist. We go back to the checklist. Pay attention to the checklist. The second thing, that's why you write step 1, step 2, so that you will not forget it. Step 1, sunshine appears. Step 2, you wait for price to cross the 100 moving average, sloping downward. Step 3, you wait for the TMA band, the true moving average. The TMA is the one that envelops price. You wait for the TMA band to cross the 100 moving average downwards. And then the last step is to what? You enter when stochastic is okay. Let me not overload you. Let's go to the chart. Let's go to the chart. I want you to see it step by step and see how it plays out beautifully. Let me zoom in a little. Good. So price is below the 4,000. That fact has been established. Sunshine now appears. Was it here? No, here. Price is below the 4,000. That fact is established. Sunshine now appears here. That fact is established. Now, sunshine must have appeared here when it was going up. It's not your concern. It's not your business until this happens. On this, the black, that's the 100. And when price crossed it here, you now also want to see the TMA cross it here. You now see that, you will now notice that your sunshine now has nowhere to repaint to. If he was here, he would have repainted higher. Now it's now going down. It's now going to maintain the line in the sun. The sunshine will not repaint. Where else would you want to repaint to? There is nowhere, because now price is moving downwards. I don't know if you understand what I'm teaching you. Now price is moving downward. So step 1, price is trending down. Step 2, sunshine has appeared. Step 3, price broke the black moving average, sloping down. At the same time, we want to see the TMA break the black moving average. Step 1, sunshine. Step 2, price breaks the moving average. Step 3, TMA breaks the moving average going down. Step 4, which is your entry. Let's see it. Step 4 says what? We want to be selling when stochastic is overbought. So now we now have all the stars aligned. The only thing that is left now is that we want stochastic. Where is that? Okay, yes. We want stochastic to come from overbought. Now look at where we are. Is it overbought? Overbought is this region. Around here. It's not overbought. So we wait. Good. Look at this. This is your entry. This place, when price enters and starts sloping down, it has come to overbought level. It's sloping down. This is your entry. And see price. Boom. It's sold. If all these things are not in your chart, you will miss it. Because the 1 minute time frame is dynamic. Candles form every 1 minute. Every 1 minute. So it will change fast. So you need to wait for all the stars to align first before you now take your trade. And see how this sell delivered, because the stars are aligned. This is what we call high probability setup. When somebody says this trade is not high probability, this trade is high probability, what the person is saying is, whatever strategy I'm using has everything aligned. Your job or your greatest dilemma would be to wait until this trade setup form. You need to wait, because if you are here, oh, it's going to go down. I know it's going to go down, but your setup has not said so. You will not wait. Sunshine and sunshine repaint, and you get stopped out. And this is why you say, oh, strategy does not work. Are you keeping with the rules? Are you keeping with the rules? The entry now, like I kept giving you this example. Before price crossed this upward, sunshine was here, but it didn't break the the stochastic. Let's look at this example now. Okay, this is a buy scenario. Let me look for one more cell setup to explain this to you. Look at where price was here. Look at this. The sunshine appeared here. Rule 1, price is below the moving. Price has crossed the 4,000 moving average. And if we confirm on the 15 minutes time frame that also price is below the moving averages and they are spread apart and they are sloping downwards. If we confirm on the 15 minutes time frame, we come here, the 4,000 is also sloping down. What do we now do? We want to see sunshine appear. Boom, sunshine appears here. Then what do we want to see? Price cross. Oh, price has already crossed. Price has already crossed. TMA. TMA has already crossed. They crossed here. They already crossed. What do I now want to wait for? Stochastic. Immediately this guy comes around this region or this region. I sell. This is your sell. Here. This is the high probability sell setup. This one is not even overbought. You want price to come around this region. I think there should be a marker here. 20 stochastic or so. Around this region. This is your sell. As price comes into here and starts going. So price has met all the first condition. Last condition, it didn't meet it. Stochastic is here. Should I be selling? No. What's the last condition? Stochastic should be overbought. So when he now came here and okay, overbought, I am now confident to sell. And this is how price just sold downwards. Now let's move to the exits. Because I will not teach you how to enter and then you will not know the exit. What does the exit say? It says stop loss. Set stop loss where? Above the sunshine that what? That triggers your trade. And what? Take profits. Set take profit where? Yes. Or what? Opposing. Who have not drank Coke first? If you've not drank Coke, just wave. Everybody have not drank their Coke. You've not. Who have drank Coke? Just wave. And you don't have it. After drinking Coke, you still cannot answer my questions. I'm saying the reason why I'm asking you is because when you go home, you remember what you said yourself, so that you will not take trades that are not right. So let's proceed. So let me show you exits. I would myself that I entered here. Where is my exit? Okay, there's a sunshine here. My exit will be here. Price never got to your stop loss. Your take profit is when you see opposing sunshine, or there's an opposing Fibonacci pivot waiting below for you here. Like when we entered the trade here. Where did we enter? We entered the trade around the region that was overbought. Was it this place? It wasn't. It was in front. No, it was behind. We entered a trade here. Is it here? Okay, but this is also an example. When price, sunshine appeared, price broke down, and then, okay, we entered here. When the stochastic was now, because we will not enter here. It doesn't matter how you are going down. When stochastic came here, we now entered. Where did we take profit? Two places. Where sunshine appeared or where Fibonacci showed. Now, someone asked a question, a very good question. It says, what if the sunshine appears here and the sunshine likely repainted here? How do I now manage my trade to make the most of it? You take partials. You take some position off, or you move your stop loss to your entry level. I was hoping that we would get a setup that aligned, so we'll take the trade. You move your stop loss to an end to where you entered, so that there are these things I'm explaining. There are videos on how to move your stop loss to break even. There are videos on how to take partials. They're on the YouTube video. After we close here, you have a lot of work to do if you intend to be successful in trading. Trading is hard work. You don't just come and because I taught you for 1 hour, you now want to now make money overnight. It doesn't work that way. You must pay rapt attention and study if you intend to be productive. So go back to the videos. Go back to, even these videos will be made available to you. And study until you know this thing. So You would exit where? You learn to take partials, you learn to break even. You now hold your trade after taking partials or moving your stop loss. As price goes down, you move your stop loss until price gets to your Fibonacci pivot. Please, if price gets to your Fibonacci pivot and there's a sunshine there, take it. Those levels are significant levels. Take it. Good. So now, the next setup, and this is how I'll be wrapping up. Where is my mouse? Okay. This is an example, and then this is an example. Look at this. Very similar to what I showed you. Price is below the 4,000. There's a sunshine here. Now, that is not the only reason we'll take a trade. Price breaks the black here, very here with this powerful move. It breaks the black here. As price breaks the black, TMA slopes away from the black. And then if you didn't enter here with stochastic is gone. You don't enter your trade here. The next place that gives you a perfect opportunity is here. I think this chart, I took it when? I can't remember when I took the screenshot. Well, the one I showed you now, the sell, happened in the morning. Do you see how similar they are? That's the thing with trading with a strategy or an indicator-based system. The setups are similar. I took this when I was carrying the chart, I think 3 months ago or 2 months ago. I can't really, okay, the date is there. But I took it a while ago. The example I showed you was this morning. And see how similar they are. That's what it is when you trade with, you know your setup. That's why we say trade a demo, back test it, see it happen over and over. You will know your setup like the back of your hand. See how similar the charts are. The chart before and the charts now are 2 different time frames, but see how similar they are. So you must learn it. So let's move on. This is for the buy setup. For buy setups, on the 15-minute time frame, I've explained this. You want to see price above, you want to see them sloping. And then you want to see on the 1 minute, the 4,000. Where do you want the 4,000 moving average to be on the 1 minute? If you want to buy. If you want to buy, you want it above. You want to see the 4,000 the price above and the 4,000 below. The moving average under, price above. Moving average under, price above. This is telling you the market is in a buy trend. Do you understand? Can we continue? You want to see it above. Now moving on, what is our entry rules? The first one says, please don't start again. The first one says on the 1 minute, we enter on the 1 minute. We enter on the 1 minute. Wait for the sunshine to appear on the 1 minute. Where? Below. Tells you, okay, we could start buying from here. It's not saying we will buy from here. We could. What makes us now hold the buy or take the buy are the other ingredients we bring to the table. Then it now says what? It's on the screen now. It says wait for price to cross upwards. Then wait for the TMA to cross upwards. Then what's the last thing? Stochastic to be what? Oversold region. Good. Now let's go to the chart and look for examples. I'm not just showing you PowerPoint, I'm showing you chart examples. Now, we want a situation where we go to the 15 minutes, first of all. This is how you do it. It's because of examples. Like now, what I really want to see. That's why I'm expecting we would possibly take a trade today. I expect to see as the market is going like this. Now, would you have losses? Yes, that's why you have stop loss. You need to take as many trades as possible, like 20 trades, to know that, okay, because your edge has a percentage of winning. This has a 70 to 80% win rate. This has 70 to 80% win rate. But 20% is a loss. You do not know which trade will be the loss. If it's the first 80, if the trade you are taking now will be part of the 80 or part of the 20, you cannot tell. Until you take a series of trades before you know which one is working or which, over time, you will now see your strategy play out. I want price, as price is now, it has broken up. Moving averages are below it, but I want to see price spread apart. The moving average is spread apart. We will now go and look for a buy. So, but let me look for an example. Here, for example, where price was above and what, if we can find that on the 1 minute. If we cannot, we'll use the 1000 moving average. Let me give an example. See, price is still below. I'm not looking for, I'm interested in buying. Now, see an example. Price is above. Where did price cross the 4,000? Here. Price is above the 4,000. Price crossed it here. There's a sunshine that appeared here, but I'm not interested because price is above the 4,000. I want to be a buyer. What do? I move. Sunshine appears here, but I want to see the TMA cross, the moving average cross, and everything sloping upward. I'm not interested. Sunshine appears here, but it's quite tricky because it's still inside the moving average. This is not a high probability trade, but for example's sake, let me show you. Sunshine appears here, price breaks it. Moving TMA now, look at where TMA breaks the black. Do you see it? We can see it now. And then the last ingredient is the stochastic. The stochastic is around the oversold region. There is a buy here. Not high probability because price is not too away from the 4,000, but there is a buy here. A quick buy. If we want, let me see if I can find a situation where price was actually above. I will show you a PowerPoint slide, but I'm trying to show you that these things repeat themselves. And as they repeat themselves, let me zoom out. As they repeat themselves, it doesn't matter when my PowerPoint slide must have been taken before now. Good, price is above. Then, let me zoom in. Look at this example. Guys, look at this example. Price was ranging here. I've established that price is above. You saw the 4,000 down. Everybody saw it. Good. So now, sunshine appears here. This sunshine must have appeared here, or here, or here. The sunshine that appeared here, if you go and jump into your cell, you would have lost the trade and it would be entirely your fault. Why? Because I told you when price is above the 4,000, ignore the sunshine that appears to tell you to sell. Sunshine appears here to buy. Price breaks the black moving average. Where? Around this region. It breaks it. The TMA too breaks it around this region. Here. It's around here, the TMA breaks it. Here too. Now, do I buy? No. I wait for this. This guy. See how oversold this guy is. I enter my buy here. See how the market moved on. If you did not take profit when the sunshine appeared, you would have suffered through this retracement. But then, that's why I always emphasize, take your profit when the sunshine appears. Or take partials. Take partials mean take some of the position. If you believe there is a Fibonacci pivot above, that price is going to hit from where you are, take some of the positions when you see the sunshine appear. When you take some of the position, break even. That means when the trade last, when the trade go and hit your SL, you don't lose anything. That's what break even means. But this repeats. Now let me show you my PowerPoint slide. You will see how similar they are. So now you now know that your entry trigger is the You now know that your entry trigger, your exit is the same. Set stop loss above the sunshine that inspires your trade. Exit at stop loss, exit at Fibonacci pivot. Exit, take profit at Fibonacci pivot, take profit at sunshine. So this is the one I want to show you. I've established that I am buying. Price is above the 4,000. Sunshine appears here. Okay, this one I'm already buying. When sunshine appears here, I wait for price. Price came, tapped into it. I want to see it above. I want to see the TMA above. It must be above the black. Yes. All right. Okay. Now he's saying that the colors are confusing. Now you could set the color to your taste, however you want. But when you hover your mouse around it, let me show you this. I chose these colors because they are easy for beginners to identify. You can see this yellow, you can see this black, you can see this blue. So that's why I chose it. But if you put your mouse here, what is that? What is that? 100 moving average. If I put my mouse on the TMA, what's this? True moving average. It literally tells you that that's the TMA. Is it not? Good. So I can change the color of the moving average. Once you come, you double tap or you right click. Doesn't matter. See, I put black. Change it. Put your taste. These colors helps you relate with what you with the chart, but put your taste. Put what you can identify. You can change it, but make sure you know that that's the 100 moving average. You understand? Who does not understand? Change it. Put your taste. Put what you. These colors are just easy for beginners to identify. It doesn't matter what your color. Even your stochastic, you can put your taste. Customize as much as you want. Just know what they are. So let me go back. So price crossed it. Look at where I put this arrow here. You buy here. Why here? This is where the stochastic came back. Is where it came back. When it came back and tapped into it, that's when I'm interested in buying. Do we understand? The rules are simple. 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 Stop loss below the sunshine. Here. Take profit when sunshine appears, or take partials. Break even. Break even means shift your stop loss to your entry, so that when it goes down and hits your SL, you get out without a loss. If you believe it is going to a Fibonacci, but if you are someone that scalps, when sunshine appears, just get your money and go. Don't take too many trades in a day. And also, I must say this, for the pair you trade in sessions. We've done a video on sessions and timing. Go and watch it. This class is too short for me to explain everything. Forex is a large industry. It's freaking broad. But if you know the basic concepts and you have a strategy, this is the end goal of every Forex journey, to have what works. To have what works. So all the noise and the jamboree, what is Forex, what is this, what is that, and the blah, 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 they are important for understanding purposes, to relate with your chart. But the end goal of every Forex trader is to have what works. And this is what Value Flow is giving you for free. This is what Value Flow is giving you for free. I've gone through the buys and the sells. This brings me to the end of the class. Online community, if you have questions, ask. Physical community, if you have questions, ask. And if none, if you understand the process, like I've told you before, go back to study. Yes. Yes. The Fibonacci pivot acts as support and resistance, horizontal support and resistance. Intraday, that means you see them work better on your 1 hour, 15 minutes, 5 minutes. Intraday, 1 minute. Now let's look at this example. If, for example, now price hits a Fibonacci pivot at this point, then sunshine appears. It acts as confluence too. First of all, Fibonacci pivot tells you it's like a support. Oh, I expect price to move from here. Doesn't mean price cannot break through it, but you expect it to move from here. Then sunshine appears. Then that's a major confluence. Then price now breaks this 100 moving average. Price breaks it, but your TMA has not broken it yet. You see how this saves you from a lot? I don't even know what will happen here. Well, I know I'm not entering this trade now. Why? Because CTMA hasn't broken the black. This is the black moving average. TMA is here, and then it hasn't broken it. For a buy?
Yes.
Like this? To the left? Back?
Yeah.
Okay, here.
No.
Can you just touch the screen?
I'm talking about this one.
Oh,
See when it was coming down. It crossed
here.
and yeah.
As far as price has broken, sunshine appeared here. Price broke your TMA and your moving average. It's telling you I'm temporarily going down. You are not going to be buying here because there is no condition. There is no sunshine. There is no moving average that broke. There is no price that breaks moving average going up. There is no TMA that breaks moving average sloping up. This is just price here, stochastic here. If you buy this, if you take a buy in this market with the sunshine breaking this and everything, it's not.
Yeah, like what I'm trying to add is that as it crossed over there,
For
it's
a-
possible to like take itself.
Is there a cross? Are you talking about this price here? You are talking about this that came down?
Yeah, as it was coming down.
But where is the 4,000 moving average? It's below price. You understand?
Yeah.
You're not looking to sell. You are looking to buy. So if you don't have any question, this brings us to the end of our class. See the 4,000 moving average. That place where you're talking about is around this region. The 4,000 moving average is here. You understand? If you are seeing something like that here, by all means, look at this. When price crossed it, it's a buy. You are interested in, buying only. When price, look at this, price crossed it, it's a buy. If price is ranging in between it, doesn't pick the direction yet, you don't want to be in a trade. Look at price below. You are comfortable selling here, until this happens. You will now wait for your buy setups. There is no buy setup. Price breaks again. You are constantly looking for sells until price comes to break again. And then when it's not in a range, you now stay out. You understand? And always use your 15 minutes for confluence. Use your, like when price comes here and gives you a sunshine and fulfills all your criteria, by all means, continue your sales. It's way below the moving average. Continue selling. You will not be in this market as a seller because price shine here, broke here. Stochastic did not give you, and sunshine came here. I'm seeing that when stochastic came here, it has already broken to the upside again. Leave the market. Wait for your ideal high probability setups to trade. Question, trust me, you will not get it done. You can't let it down. Except you've been doing it for a while. So, but the video will be made available for you. You can go back and rewatch it. Also take advantage of the videos that are online, what it's for, how to register with a broker, register with equity, there's it. How to break even, how to take cash out, how to identify trend. It's there. It's all there. It's there, yes, on our YouTube channel. That's right. It's there. So take your time when you are free or create time. Study. How do you document your trades, document your learning processes and the rest. So with that said, brings us to the end of my session. For me to take over. Cheers. Until next time. God bless.
Thank you so much. That's so amazing, and I believe everyone will all enjoy the training so far. So we gained something all through since morning. I believe we've been able to gain something all through since morning. So right now, I will just be talking about risk management in less than 2-3 minutes. I'm up for the risk management. So that's what I want to do here now. So, Sorry. All right, so we'll be looking briefly into the risk management now, and that is the backbone of every trader. If you're a trader and you don't understand your risk management strategy, you're just a step to your village. Yeah, that's the truth. I know some of us very well that some people will say that they trade naked, good, without indicator, good. And at the same time, I asked someone it was last month, May, who said his own trading naked is not only by indicator, but even stop loss. So he trades without stop loss. And my advice to him is just keep packing your load, because you are closer to your village than ever. You won't even have transport. Because including your transport and everything you are off to your village. So as a trader, you have to understand risk management. And what does risk management simply mean? It simply means what you can afford to lose. This market is not a vague kind of thing that you won't know, okay, this is what I'm ready to lose. So in case this thing goes against me, this is what I want to lose. You are the one in control of your system. The buy and sell button is with you. The stop loss button is with you. So the moment you enter the market, you must set your stop loss, even before execution most times. But many times, traders, you just open the position. Sometimes you even set your stop loss. And when you are seeing price approaching your stop loss, instead of you to admit you are wrong, you still drag it. Admit you are wrong, you drag it again. So it will now be the price chasing your stop loss. You'll be doing cash and seek and found. But very soon, it will definitely catch your stop loss. And it will kick you out with a very huge loss. So better when you are trading, immediately you come into the market, set your stop loss. If it kicks you out, admit you are wrong, look at it again, reanalyze the market again, like all the strategies he already showed us. Okay, this is where my stop loss will be. If it comes there again, you take it, you're out. Sometimes you take, 3-4 losses in a day. Yes, very, very well. I think was it sometimes last week when Jay was showing people shaking up and down. Sometimes the market, it will be as if your village people are just looking at you at the market like this and they want to bring you back home. But the way you can help yourself is just put your stop loss there. It kicks you out the first time, go the second time after proper analysis. Kick you out the second time, you can still take the third trade. Kick you out the third time, brother, you are absolutely wrong. If it kick you out 3 times in a day, just close the laptop. Go and, just go and play. Come back. Exactly. You really need to play, because sometimes your psychology can easily adapt to loss. And that's the thing about many traders. And this is just a human nature. It's a normal thing. It's a human nature. You will see small loss, you take it. Big loss, you still be doing man. Na man I be. I feel like. Until the account wave you goodbye and you wave yourself too. So when it comes to stop loss, is a way and strategy of you preserving your account and also preserving yourself too, and also managing your psychology. So it is important to have stop loss. Now, risk to reward. This is simply means that how much am I willing to risk to get this? For example, now I'm willing to risk $10 to get $30. Is that a good business? I know some people say, no, that's too small. No problem. Risk $10 to get $200. Bravo. But the day you are going to have a very big loss, that you'll be having $200 loss, you just be praying to God, let it just come to break even. Where I enter, just let it come in. You'll be looking at your chart like this, and you'll be praying. You know, I saw the video on someone's status a few days ago, and the guy used his school fee to trade, and when the market was going against him, he started reading Psalms. Our Father who art in heaven, hallowed be thy name. Oh, truly, we are spiritual people, but this market you are looking at, it doesn't know anything. It is a law of cause and effect. You do this, you get this back. So when you are trading, make sure you have your risk to reward. Now, how much am I risking to get how much? That simply means I'm risking 10 pips to get 30 pips. Meaning that, let's say my risk is $10. All I want to get is $30. And I'm out of the market. The market is nobody's father's house. So just go there, pick what you can pick, get out of it. That's it. That's when you have a proper risk to reward system. And there are some times that you have 1:4 or 1:5 when you see that your entry is very, very perfect. And this is always my own advice. When your trade gives you 1:2, just bring your stop loss from minus to break even. What does that mean? Let me go back to our trading platform. Now, let's look at this now. All right. Look at this. Just let me take a trade now. Look at this GBP USD, and I want to sell. Let me say I'm selling GBP USD now. Now I've executed a sell trade here. Can we all see that? Can we all see that now? Now I've executed a sell trade here now. What will be my risk? How much am I risking, or how many pips am I risking? I'm using a one lot size, so I'll be risking just 10 pips. All right. So that is 10 pips. How would I know? All I just want to do is, you see, I'll just put this here. You're saying I'm risking $100, $104, isn't it? And what am I trying to get? I want to get $300. And this is it. This is all I want to do. And just leave it that way. You get it now? So this is a risk to reward of 1:3. Do we all see it now? Are we together now? Meaning I'm risking just $100 on to get $300. If the trade goes my way, I'll get my $300 out of the market. And if it goes against me, I'm going to lose my $100. Done. You get the gist now. But there are many, sometimes, if you know you are the riding type, you just see them, you just put, oh, I entered here, this is what I'm doing. I'm going to risk $100 to get $1,000. And you clap for them. Bravo. Is it possible? Yes. How soon will it be? I don't know. But if I'm trading 1:3, I know that is very, very possible for me. and that won't take me that long, because the market won't just be running down as if I just put maybe a ring and beat the screen just for it to collapse. No, it won't just run all the way. You see, the market will go up, down, go up, go down. That's how it will be moving that way. Get the point now? So that is exactly how it works. That's exactly how it works. So risk to reward is simply how much am I willing to lose on this particular trade, and how much am I willing to gain as my profit. So as a trader, you need to know all these before you execute your trade. If on the $100 account now, please don't go and use one lot size on the $100 account. That's very, very deadly. So for example now, if it's on the $100 account now, what will I use here? I won't be risking more than 0.02, or probably. Now what does that mean? It's simply risking 1% of your account on each trade. What is 1% of $100? That's just $1. Meaning, on my $100, I want to risk just $1. Or I want to risk $3 or $5. That is a whole lot. That's 5%. It sounds as if, oh, it's nothing now. And how much, if I'm risking just $1, how much do I want to get as profit? 1:3. That will be how much? $3. But some of us will just look at it and be like, so you mean since I'll just have those $3 on this $100? Nonsense. What I want is, I want to risk $10 to get $30. Now the first trade you took, the $10, question, all right? Okay. Say, please, does price action matters? Yes, it matters. If you know it, you write it on. Now, the TMA, if it doesn't, and this is to everybody now, in case you are not getting the TMA, it's not showing like this to you, we are going to resend some other, the same indicator, we are going to resend it to you. And at the same time, you are going to get the PDF of this particular training. You get everything all sent to you. So I believe you can get that. All right. Yes, the video, the PDF, everything will be sent. How many trades are you expected to take in a day? It's advisable, don't take more than 3 trades in a day. You take the first trade, you get it. Take the second trade, you get it. Take the third trade, it's also a win for you. Bro, close your system, blessed day. Come back the following day. Or else, that fourth trade may be your donation to the market. So please. Said, does fundamentals matter with the strategy? Now, with this particular strategy we are teaching you is just for scalping. So that is why you have to be very, very careful and look out for news events. When news event comes out, news events don't respect any indicator or anything. It's either it tears it up or it tears it down. That's why in the first place, at the beginning, I advised us, as a beginner trader, during news, stay out of the market. Just stay out of the market. It's like you are a marketer now, like you go to the normal market and you add Boko Haram is coming with a bomb. What are you doing there when you have that kind of information? Just stay in your house. Let whatsoever wants to happen, happen, then you come back again. All right, I believe I've answered your question. Yeah, what do you do when the scenario or the rules align in 1 minute, but the stock moves away from the overbought or oversold region when the stock comes back again? Now, if it leaves that way, All right, let me finish this lot size of 18 and I will attend to this last question. I will call it today. Now, look at it very well. Now, if you are having a $100 account, like I said earlier, don't risk more than 1%, at most 2% of that account on a trade. Meaning, on your $100 account, don't risk more than 2% of it on a trade, on one particular trade, so that you'll be able to have like 3 trades in a day. So if you are risking 2% of your account on each trade and you took 3 trades in a day, what does that mean? That means you are risking $6 in a day, isn't it? So that you still have more. And now if you risk 2% on the first trade and you get 3% of it, 1:3, you get 3%. That is $6 on your first trade. You did the second time, that's another $6 on the second trade, and you did the last time, that is another $6 on the third trade, which is $18 altogether for the day. $18 on a $100 account is done. You are done for the day. So this will be the end of today's training, and we are going to take it a step further, where we are going to be looking deeply into structure and also refined entries, and you are still going to have the opportunity to trade together with us live on Friday. But that will be the ticket for entry on Friday. Is you are going to deposit in your equity account, the one you opened, the equity account you opened. You are going to make a deposit of $100 so that we can trade live together on Friday. We are going to trade live together here on the floor on Friday, so the door is open, but the ticket for entry is deposit that, and we are going to take live trades together on the floor here on Friday. So this will be the end of our training. It's been free. Thank you for coming. Another set are coming in soon now, so that will be the end. If there's any question, you can always reach out to us on our social media handle, Value Flow Trading, be it on Instagram, WhatsApp, on Telegram, LinkedIn, and also if it is email, the email sent to you, you can also send us anything you want to send there. And like we said, we promise we are going to send the video to you. You are going to have access to the video online on YouTube, and at the same time, you are going to have access to the slides and also the PDF. We are going to send that to you personally. You are going to get that on your email, via your email rather. You are going to get the PDF files, and the video will still be online on our YouTube page, so you can still watch it again. And we believe this, even if you are a novice, this has given you the insight to trading, and you can easily be doing this. Like my colleague said, make sure you back test it. You know, it simply means you sitting down and trying it out, and you get it to work for you. Thank you very much. We truly appreciate you for coming. Cheers and God bless.
Sir, I have a question.
All right.
What of someone that is like there's a novice, I'm not done this class. In that account, creating that account, can somebody
Yes. If you are a novice and you do that, if you deposit in your account and you come on Friday, we are going to take, like I said, we are taking the training further, meaning we are refining deeper structure, talking about market structure, all you need to know about technical analysis. We are going to give you some tips about that, and we are going to have live trading together on Friday. So, but the ticket to enter on Friday is you just show us your equity account and you make your deposit, then we roll in on Friday. Hope I've been able to answer that now. So that's how we want to do the Friday training. So see you on Friday. We look forward to having you all together and having that adrenaline rush together on Friday, where we are going to trade together. I know as a beginner trader, if you want to trade the first time, that's eager, that rush in you. We will experience that rush together. So we'll tell you, calm down, and we are going to take it together. So thank you very much for coming. Cheers and God bless. All right. Yeah, so before as we finish, you can always, build network, we meet and greet, we exchange contacts. This is how we also started sometimes many months ago. So we came to the classroom this way, we meet and greet, we exchange contacts. You can also have that, and after the class, after this, who knows, maybe the next trader like Ejimi is also here too, who is going to take us to the next level in trading. So meet and connect again. Thank you very much. Connect with your colleagues, connect with your friends, and see you all together on Friday. Cheers and God bless you. Thank you.